Good weekend, all. Ira Epstein with your weekend edition of your SPDR ETF stock market wrap-up. And this wrap-up is for Friday, and we're at the 1st of December. It's hard to believe I'm saying that, 2023. All right, as we take a look, the big event of the day, the stock market up again. So not only does it finish off the time frame of November being one of the best November, I think it's second biggest record of a November of all time, the market starts off and the beginning of December doing the same. Now for the S&P, be careful. The seasonal tendency is for the market right here for the upside to abate. That doesn't mean it can't go higher, but it's not the probability that it had before. You still have those probabilities at work in the Dow and in the NASDAQ at this point in time, but they're getting old in the tooth in terms of the seasonals. Does it mean you can't keep going higher? No, it's just seasonals, and that's all it is. Would I trade on seasonals? No. Do I pay attention to them? Absolutely. Do I make the chart work? Do the work? Yeah. But that's one of the studies. So like a moving average, I look at seasonals in certain markets. Now, I don't look at them on individual stocks. I don't know enough about them to do the individual stocks, but I certainly know enough to know, hey, Amazon comes along, let me think, Black Friday, I think I want to own it prior to then. Christmas, I think I want to own it prior to then. And I don't want to own them right after those periods because they generally come back a little bit, and that's just what's been going on. So you pay attention to what that all does, and that's the important thing. Another seasonal that I offer you, remember, my Cyber Week special. It is going on. It will end in 48 hours or so. So it's coming to an end. You can get any of my free charting courses. And by the way, my original charting course, don't take this right now. I've got a new one coming on, and people have asked me, if you've taken some of the original charting courses I've done over the years, maybe 7 variations, 6. I do, only for that course, offer a legacy discount when I put out the new ones. So yes, if you have bought in the past, we generally have a record of it, and you decide you want the brand new one, yes, we will let you do that. So just, people have asked about it. I'm very good in being loyal to my subscribers and past people that have bought my courses. So how do you get this? Well, a couple of ways. You have to buy a 1-year subscription if you're not a current subscriber. If you're an old subscriber, you come back, you qualify. And when you do so, you can pick any of the courses you want. You start them when you decide. You can, if you have a current subscription, upgrade it. So if you're in the Spiders as an example, add the combo, go to the combo. If you're in the combo, take the full research, drop your morning subscriber video because that's included in the full research, and stay with your Spider. What I won't allow is going from the morning futures to the Spider and giving a course because they cost is about the same, and that's not fair to me. How do you get it? Go to our website, iraepstein.com, and just go to the research area and buy. We'll know, and you'll be getting that. You can also give us a call, or you can take your link right up here, and if you click that, that's the way to do it. So you're not going to hear too much about this from me anymore because this is coming to an end. But what's not coming to an end is the marketplace. So, Affirm. I told you that I wanted to start looking at companies because we keep hearing, even today, Fed Chair Powell saying what? You know, people are buying more on their credit cards and some of those pay for play. Well, there you go. And Affirm up this week. It's hard to believe, 43%. I mean, that's why it caught my attention. It's getting all this play. Now, this stock was once a high flyer in the $150, $160 range. Then it came down, and now the market is moving again with it. The pattern is certainly bullish with higher highs and higher lows. The market's probably going to get a crossover here where the 18-week average is going to get over the green, the 100-week average. That'll be another bullish influence. It's over the upper band. What are the odds of staying over the black dashed line? 5% of the time. That means you can also go up there 3, 4, 5 weeks in a row. You rarely go more than 5. Would I ever tell a client to buy over a Bollinger Band? Never. It would be a mistake on my part if I did it. And I won't intentionally make a mistake. It would be an error. I wouldn't do that. Could it go a lot higher? Yeah, but I don't care. If it does, it does. The market's trying to set up a breakout. Let me explain a breakout on a weekly chart. You'd have to, this coming week, take out this week's high, make the higher high, close higher than the current week, and in the very top quadrant of that week's high. You won't know that until Friday, where you're at. Are you overbought in the swing in these slow stochastics? Yes, this is the SSTO, the slow stochastic study. When both numbers are over 80, it's embedded. But when either of the numbers is over 70, either one, you're in overbought territory. So a bull trend, a possible breakout that is overbought. In Microsoft, one of my favorites, I keep mentioning that, but it's rich in the tooth. I certainly wouldn't go chasing this market at the upper Bollinger Bands. You might want to, I don't. I'll let it pull back. It either embeds, and I have a way to get in that. If you've taken the enhanced Bollinger Band course, that's one of the ways that we'll attack it. And if not, then a normal correction, we'll take a look. Overbought, keeps me away. In fact, most markets are overbought. You would expect that on a weekly chart, as you've had a hellacious run to the upside one way in most markets for the month of November, and December starts that way too. You're overbought. Certainly in an uptrend in KRE. Big gain. Who was the guy that called this? Bill Gross. And it was back here that he was talking about it. Very, very good call on his part. Maybe you go to the upper band at the 4,900 level. I can see that. You now have an outside week up. A warning sign in this would be taking out this week's low over the next 2 weeks. Got it? This coming week and the week after. If you're taking the outside day course, you learn about that. In MCHI, no trend. You got lower lows, higher highs, not doing a lot. The Chinese markets are having a real hard problem. They still haven't deployed any money for their property sector. I wrote about that in my full research today. They haven't given us the 50 company list that they supposedly are going to make easier money available for. There's a lot of they haven't done's, and their economy's feeling it. So far, President Xi's doing a terrible job. Somebody's got to say it, I might as well. He isn't doing the job. He's driven out foreign investment. I think you'd agree with that. He's got sanctions galore because they steal products from top mines, America, Europe, so on. Not the smartest thing. They've been good at mimicking, and they're also very good on their own at doing things. I don't think they have to steal. I think on their own they can develop, and if they do that, they'd fall back into the world fold. Do they care about it? No, they've got good friends in Iran, Venezuela, and Russia. Okay, that's wonderful. That'll get them very far. In XLI, lower low, higher high, overbought market. XLE, the energy. I made mention yesterday that I think this OPEC deal is a joke. First of all, the term voluntary. OPEC always says voluntary, but normally voluntary means the screws are to you. You better do this. Oh yeah, I'm volunteering, I'll do that. In this particular case, they didn't even have a press conference. Nothing, no statements. So what it told me right off the bat is the word voluntary is verbiage. And proof of it today, again today, Angola said no to it yesterday. Brazil's head of state for energy came out today and said, yes, we fully intend on joining OPEC in January, but no, when we join, won't be putting production cuts into place. Can you imagine the Congo, Nigeria, and some of the other countries that are fighting this, UAE? So it is not an easy road. And how did the market treat this? Well, while you're up for the week, if you take a look at what crude did, it didn't do well today. It lost another couple of dollars a barrel. In UUP, the dollar index, you peaked out. Now, the first sign of a peak, when you come down, you can get a swift break like you're having. Then the market tries to correct that a little bit and often resumes the break. I wouldn't be surprised if you end up down here sometime in January. Wouldn't surprise me at all. Could be before then, but it wouldn't surprise me at all. In GLD, everybody thinks they missed gold. I did. So let's call white, white, black, black. What I did in this situation is I looked at the market, but I don't have a chart set up. So yeah, I would miss it on a weekly chart for sure. I'm overbought, over the upper band. I have a pattern of what? Well, I had a pattern, if you take a look at it, of higher lows, higher highs. When you come back on the chart, and I looked at this very hard on a weekly basis, the buy would have been back at 179.31. But it was overbought, and it never broke there anyways. The market just moved. Now, am I anxious to chase the market over a Bollinger Band? And the answer to you is, why would I do that? 5% of the time, the market stays outside the Bollinger Band. It means 95% of the time it pulls back. It could easily pull back down here. In GDX, higher lows, higher highs, the resistance between the Bollinger Band and the 200-week average, I don't see anything to do there. In Tesla, comes up, and people are thinking that the Tesla presentation yesterday was a disaster. They don't like the mileage. They don't like the price of it. I thought it was a pretty good presentation. The problem is the car for the cheaper version, the $60,000, if you can call that cheaper, is supposedly a 2025 delivery. So what they did is they were able to get out the first set of deliveries for what? The first set of delivery comes with the $99,000 version, which plenty of people want. You're the first guy on the street. You're going to want it. There aren't a lot of them. You're dropping the value of the cars, probably not there at all. You probably have a premium you could sell it for immediately because you've got the one. People don't have them. That's just how new things work. So I'm not agreeing with people on that. I think the market's digesting it, fighting a battle at the weekly chart, looking for the next set of direction. In Uber, I like Uber. They just keep expanding their business. Cities are getting busier. We're at Christmas time thinking shopping. Another week or so, it'll be crazy in retail. People are going to be taking Ubers. You don't want to drive downtown in big cities. It costs you more to park your car than you can take an Uber and go home with. So I like what I'm seeing there. Darden restaurants, did I not say? And I'm going to leave this very shortly and put up another chart, so I want to warn you. But as we were coming down here and came back, I said that was the game. The people that should have been hurt, the students that are repaying loans, the market was fearful they wouldn't spend. Shortly after that, when this repayments began, remember, this is the beginning of October, and that didn't happen, the game came to life. Not only does Darden have expensive restaurants, Capital Grill and other, but they have plenty of inexpensive, and they're humming in business. So this market out of the woods, I think pullbacks at 150.33 are interesting, but an overbought market doesn't interest me. And most markets are overbought because a rising tide, which is what we had in November, picks up all ships, and they all did it. Google's been an exception. It's actually in a downtrend at this point. Lower highs, lower lows, and it finished under the 18-week average of closes. If this market's got any surprises, it's to the downside. It's just not, people don't love it right now. 124.85, you'd have to get back over this week's high. 131.10 in order to have a situation where you're not that bearish. And there's my news with it. So you put it all together, you get game plans, you follow through with them, you work with them, and that's what you have going on here. To me, it's a lot of fun. I look at it. Again, Amazon just sitting at 147. It didn't peak out. Disney, they put out, for the first time in a couple of years, a dividend, and it didn't respond. Their movies are doing terrible. Bob Iger's got his hands full. You know, what happens in movie theaters this year at Christmas if you don't get a big number out of, what is it, Aquaman 3? That's the big movie. Beyonce's movie's coming out right now. It's 3 hours long. Can you imagine? I didn't go to the Taylor Swift one. I don't want to sit that long with people jumping in the aisles either. But it'll be on TV, and you can watch it at your own pace and hit pause and enjoy yourself and go to the bathroom. So with that, remember the Cyber Week sale. Move your cursor to the top here. That's one way to get there. Or go to iraepstein.com under research, whatever you buy. I promise we know, and we'll be certain to get to you and tell you about what you can do and when you can do it in the free charting courses. You have yourself a great weekend. I'll catch up with you all Monday morning.